Binance stock trading pulls over 80% of week one volume from emerging markets. Binance published first week numbers for its direct stock and ETF trading product on June 10th, and the headline figure is geographic. More than 80% of trading volume came from emerging markets. The company shared the data through its official channels, including a post on X on June 13th noting strong global interest, with emerging market users driving over 80% of volume and many users taking a longer-term holding approach. Reports from outside coverage put the precise share at about 84%. The product lets Binance users buy fractional shares of US-listed stocks and ETFs directly inside the exchange app, rather than routing through a separate brokerage. First-week assets under management in stocks passed $400 million, according to the company's release carried by PR Newswire. A user base that skews young and small ticket, the demographic split, is the part traditional brokers will study. Roughly 1 in 4 stock users were under the age of 25. Nearly 40% of trades were placed for less than $100, and the minimum to start was as low as $5. For comparison, account minimums at many conventional brokerages still run from $500 to $10,000, a gap the company pointed to directly. That low entry bar explains a lot of the emerging market skew. In much of Latin America, Southeast Asia, Africa, and the Middle East, buying U.S. equities has meant clearing banking requirements, paying foreign exchange costs, and meeting deposit thresholds that price out smaller savers. Putting fractional shares behind an app many people already use for crypto removes several of those steps at once. Behavior in the first week leaned toward holding rather than day trading. The company said about 70% of users showed holding patterns instead of same-day buying and selling, and that roughly 64% of signups who reached the product went on to place at least one trade. Information technology led sector allocation at around 57%, with semiconductors and hardware names taking a large slice of inflows. Crypto apps keep absorbing the brokerage. The launch is part of a broader pattern. Exchanges that started with spot crypto are folding equities, payments, and savings into a single account. The pitch is convenience, one balance, and one login for assets that used to live in separate institutions. The risk is concentration, since the same counterparty now holds more of a user's financial life. That convergence is the same force behind the crypto card market, where wallets and exchanges attach a spending layer so balances can move from investment to checkout without a bank in the middle. The geography rhymes too. Emerging markets that drove Binance's stock volume are also where stablecoin-based spending and zero-FX products see the strongest pull, for the same reason. Local banking rails are expensive, slow, or hard to access. On-chain card spending hit a record in May, and the user profiles overlap heavily with the cohort buying $50 worth of US stocks from a phone in Manila or Lagos. It also lands as rivals chase the same ground. Other large exchanges have rolled out tokenized or direct equity access in recent months, and the competition is increasingly about which app can be the default home for a young mobile-first investor in a market where legacy finance never reached them. Open questions on the offering Binance has not broken out. Which legal entities can access the stock product or the full list of supported jurisdictions in this data release, and direct equity trading sites under different regulatory regimes than crypto in most countries. The first-week figures describe demand, not regulatory coverage, and availability will likely vary by region as the rollout continues. Users outside the supported markets will not see the product regardless of the headline numbers. The disclosed AUM and volume also come from the company itself rather than an independent auditor, which is standard for a week one launch update, but worth noting before reading too much into any single figure. The clearest signal is directional. When the friction drops to a $5 minimum inside an app people already hold crypto in, the demand for global equities in emerging markets shows up fast.